Good morning, everybody, and welcome to the Elite Traders Club weekly analysis session for Monday, the 10th of August 2015. We've got a few amendments to our agenda this morning, something a little bit different. I thought I'd just like to go and have a broader look at some of the global markets, discuss a little bit about portfolio management, some of your experiences with that, depending on whether you are trading the Australian market, which has been pretty difficult, or the Australian market, or a combination of both. So that's on the agenda for today. All right, let's get underway. First and foremost, a quick reminder about the Academy coming up at the end of August. You should have received some emails last week providing you with a little bit more information about some of the content of those particular sessions, and also a guest presenter in Stuart McPhee coming along to the Academy as well. Stuart's a really interesting person, very experienced trader from an army background, so well versed on some of the aspects in particular of mindset, discipline, and the importance of keeping your trading simple. So that's at Sanctuary Cove this year. As you've seen before, beautiful venue, great location, great topics, and so far a really good group coming along. The disclaimer: the content of the presentation today or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, your financial situation, nor your particular needs. So please, before making an investing decision based on the general advice presented in any of our presentations, please consider whether the advice is appropriate in light of your financial circumstances. Okay, the agenda today, talking about obviously portfolio management, the market risk conditions in both our markets that we're looking at in our universe, the US and the Australian, looking at some specific setups. I'm also going to have a look at a bit of a review of the portfolio. I did a little bit of that last week as well. A comparison as well of global markets, just to see what's happening around the world, just to get a little bit of a context. For the last few years, we've seen that the US market has been a particularly strong market. It's not always going to be the case, and I think it makes sense for us to keep our eyes on other markets, looking for other opportunities as well. So I'm going to go through that. I'm also going to do something that I've not done before and give you a look at my own personal portfolio. So I know from a curiosity point of view, people will often ask, well, okay, David's looking after the Elite Traders Club and teaching us how to manage our positions and things like that. How is his portfolio going? What is he actually doing? What stocks is he in? How is his portfolio performing against the benchmark? So certainly not afraid to show my own portfolio there, obviously with a few disclaimers in there, a few little things blacked out. I certainly don't want you knowing my account numbers and all those sorts of things. But anyway, it makes for an interesting session. The benchmarking model at this point in time in the US market, we are still in moderate risk. That stochastic is still below 80 and above 60. Certainly feels like it's a little bit higher than that, given some of the up and downward movement of recent times. The Australian market, we are still in high market risk. Last week wasn't a particularly good week on the market, and those of you who listened to the macroeconomic session on Friday after it was recorded went in and explained, or asked Jeff in particular, his area of expertise, why ANZ Bank had to go through and raise a bit more capital, and certainly well explained in layman's terms. And it looks like some of the other banks will probably follow suit. So get ready for a little bit more market volatility, given that our index is, by and large, compromised of a lot of the banks. All right, so at this point in time, in terms of our capital management, assuming that you are splitting half of your available trading capital between the ASX and the US, it means at this point in time that you would be able to have 7.5% of your capital allocated to the US, 7.5% of your capital allocated to the Australian market, because currently we are in a high market risk in the Australian market. That means you are only allowed to apply 40% of that available trading capital, so 40% of your 7.5%, meaning that you are allowed a value at risk across your portfolio for Australia of only 3%. Over in the US, if the other 7.5% is allocated to that particular market, because we are in a moderate market risk over there, we apply an 80% market risk multiplier. 80% of our 7.5% that we've got available means that we are allowed to have 6.5% of our total capital exposed as value at risk in that particular market. Those of you who are still choosing to scale out, if you are in Australia and you're looking to take some profits along the way, then looking for one-to-one type targets. Those of you who are trading the US and choosing to scale out, you're looking for 2-to-1 type of targets there. All right, that's my portfolio. I won't go into that right at this point in time. I want to go through and have a look at the markets first and foremost, as we usually do. I've got a couple of questions there. Good question from Phil. He's asked, had trouble finding the macroeconomic recording. Perhaps what I might do towards the end is just show the website. Once you log in now to the Elite Traders portal, what we've done, we've actually consolidated the information into 3 main sections. So you'll have the weekly analysis sections under one icon. You will have the weekly education sessions under another icon, and you will have the macroeconomic sessions under a third icon. So when you log in, you should be able to find those, but towards the end of the webinar, I'll bring that website up to show you that. Okay, so this is the S&P 1500, our benchmark for the US markets, and I've drawn a box around there because really this market for a large part of this year has pretty much gone sideways. So interesting to note that as well, that whilst the market has gone sideways, at the same time we've had, if I just show you here, we've had one market change there, 2, 3, 4, 5, 6, 7, 8 market changes, whilst the whole market predominantly has gone sideways. And this is something that I'll be presenting at the Academy, a different version of, if you like, market risk profile, something that's going to be a lot easier and avoid the yin and yang, up and down, flip-flop of market risk changes, because having a whole lot of market risk changes when the market is broadly going sideways continually focuses, I think, the mindset on, gee, what is this market doing? It's going up. 1 minute it's high risk, then it's low risk, and really does throw up a few curveballs for the way you think about the market. So very much got a simplified strategy they'll be presenting at the Academy. Certainly in terms of the US, what's the market done this year? Well, you can see I've just put on a little line here, just a basic P&L line from Beyond Charts here, and it really just shows that the S&P 1500 has moved 5.22 points in all of this year, representing around about a 1.1% movement for the year. So whilst the broader market has been moving sideways, it's important. That's why it is so important that we look for those stocks that have that relative strength regime, so outperforming the benchmark in a number of time frames. So it's really important, and again, it's something that your scans do very, very well for you. At the moment, you'll see that the stochastic is still dipped below 80, just above 60 for the time being, so we're in moderate market risk under the current parameters. Let's go through and have a look at the ASX 200, our benchmark in Australia. You remember from earlier sessions that we got off to we flew out of the blocks. Our market was up nearly 10% at the beginning of the year and was really boosting the portfolio along very, very nicely. Since then, we've really struggled. We've been in a downward movement for a period of time. It looks as though we're trying to consolidate and certainly finding areas of support around the 5,400 level. Last week, terrible week, obviously, through the banking sector, dragging our index down. Surprisingly, when reviewing the Australian portfolio this week and looking at stocks, etc., that are in the open positions, there weren't any that were actually stopped out this particular week, this last week. So again, having stocks that are having good high relative strength is helping just to keep the portfolio, those in the watch list, their heads above water, which is a positive sign. Our market now has put on very few points, 38 points from the beginning of the year, and at this rate, if it continues with that rate of movement, we're going to end up with a return of about 1.2% just on price action for the entire year. So our market not performing very well at all, even though it did perform well early on. The Dow, I mean, we don't use this as a benchmark. It's just the top 30 stocks in the US. It's negative at the moment, and if it continues at its current rate, it's going to be about minus 4% for the year. So interesting to see what's going on there amongst the biggest stocks in the US. This is the Nasdaq. This is the composite. So there's a couple of Nasdaq indices. The composite is the big Nasdaq index. This has got about around about 2,700 odd stocks, I think it is, in it. Certainly performing a bit better than the S&P 1500 and also the Dow. It's put on just over, well, not quite 7% for up to this point in time. And if it continues at the sort of current rate, it's going to end up putting up around about 12% for the year. So certainly stocks in the Nasdaq generally outperforming those in those other two benchmarks that we talked about. This one is the Nasdaq 100. This is just the tech stocks. So stocks like Apple and Netflix as big examples of that. Again, performing a little bit better than those other benchmark indices as well. Interesting, the Nasdaq, the QQQ, which is the ETF that follows the Nasdaq 100, that's one of two ETFs that are in the Elite Funds Maximizer at this point in time. So again, you can see a little bit stronger movement in the Nasdaq 100 compared to those other indices, which are either going sideways or certainly more biased towards the downside, if anything. The Nikkei from the beginning of the year, it's put on 18.76% at this particular point in time. If it keeps going, it's on target to do around 30%. This is an index, obviously, that's performed very well, very strong in terms of its own performance. And this is one that has, in the past, been part of the Elite Funds Maximizer as well. In fact, the ETF that is chosen for the Nikkei, which is EWJ, has been in the EFM prior to its release. Of the last 6 or 7 months, it's been in there for about 4 months. So again, adding a lot of value to that particular strategy. And again, just drawing your attention to the fact that there are other markets out there moving at different rates of change, if you like, as one aspect of momentum. This is the Chinese market. A lot of volatility in that particular market. Really strong movement in the early part of the year. A lot of volatility of late. And if those of you have had a bit of a look about the Chinese market, you would have noticed the headlines, good and bad both ways, etc. But even still, from the beginning of the year, that market still put on around about 11%. So certainly it's come back a long way, but it's still in positive territory. Some of the other ones, that's the S&P 1500, the German market, again, certainly in the last 12 months has had periods where it's been in the Elite Funds Maximizer as well, obviously picking up on relative strength momentum as well. This is a market that's now looks like it's found a level of demand and starting to move at least in the upward direction for the time being, certainly performing better of late than both US and Australian markets. That's the French market, the CAC there, similar sort of picture there, getting back to previous highs as well, perhaps a little bit quicker than even the German market. The highs earlier in the year for the German market, the DAX there, the French market getting back to those highs a little bit quicker. That's this the FTSE MIB. This is the Milan Exchange. This is Italy. Again, getting back to those previous high levels as well. And that's the FTSE 100. That's the UK market over there in England. So only putting on a couple of % for this year. So I just think it's worth every now and then. I'm not going to do this every week, but every few months just to have a bit of a look at to see what some of those markets are doing as well. All right, let's go through and have a look at the setups this week in the US market. So I just want to zoom in a little bit so we can all see the screen nice and clearly. We've got a new setup here on ALTR, Altera Corporation. Certainly with that the last candle there, putting in a higher high and a higher low, and as a result confirming a short-term uptrend. So at the same time, therefore, it means that we've also had a new medium-term trough formed. That medium-term trough that's formed, is it at or above the second from last peak? It's clearly above that. All we need to do is zoom out and just see if there are any long-term peaks that are going to get in the way. We're already above the previous long-term peak that might have threatened. Only other serious long-term peaks are way back in 2000. So certainly, as far as this stock is concerned, plenty of opportunity to move to the upside. So on the basis of that, we just need to make sure that we put our stop in the right place, and that means putting it at least mental blank for a minute there, David, at least a minimum of 2 ATRs below our entry level. So on the basis of that, we need to put our entry level 2 pips above our last medium term peak. So our on-stop order becomes at 51.93, and I'll just confirm that for you. That there we go. Our high there is 51.93. Our little blue line there, I must have moved the chart down a little bit, and as a result it skewed that little blue line, our entry level, down, so that should be 51.93. So I'm just going to change that as we do it. So right clicking, modifying, and 51.93. Alright, 51.93. Hugh says he's having trouble with the connection. Oops, let's go back to there, David. Third time lucky. There we go, back to our Beyond charts. So 51.93, I've amended that. I'll just get rid of that value line, get that out of the way. 51.93, limit to 52.44. Protective stop at 47.78. That's ALTR. Next one on the list, Boyd Gaming. Similar sort of situation here, where last week's candle has confirmed the formation of a new medium-term trough. And again, it looks as though our little blue line has gone a little bit skew-if. Needless to say, the annotations on here are correct. So what I will do, I will just bring that into the same level. 1763 is the level there that should be on that one. There we go. So on stop at 1763 with a limit to 1779 and a protective stop at $15.85. So certainly at least 0.5% below that last medium term trough, outside of 2 ATRs as the very least. Just zooming out, we really don't have much to think about until we get well up into this 35 sort of level at that particular point in time. So we've got a series of medium-term troughs on the way down. We're really looking for longer-term peaks or longer-term troughs, significant points of supply that we may encounter along the way. And there's nothing really serious until we get up to the 35 level at the very least. So plenty of opportunity for that particular stock. That's Boyd Gaming. Next cab off the rank is ConAgra Foods. ConAgra Foods, very strong price action of recent, having a little bit of a retracement. Still very, very strong relative strength in all 3 time frames. Last week putting in a nice candle, particularly in light of what the broader market did. All we've got to do is break our most recent medium-term peak, and we should be off to the races. So let's just check where we are in the scheme of things, just to make sure. and we are in blue skies. So that's a promising sign for this particular stock. You'll see again that the stock for a long period of time had been establishing, a period of consolidation, a base pattern, call it what you like. But certainly once we've broken out of that, we broke out very, very quickly. We've come back, we've retraced. So the structure of the order in this one is on stop at $45.51 with a limit to $45.95. Protective stop underneath that last trough outside of 2 ATRs has the stop at 42.61. That's CAG, ConAgra Foods. Next stock. When you're ready beyond charts, there we go. Is CBRL, Cracker Barrel. And just having a look at the price action on this particular setup. Last trough, just needing to make sure that that last trough is at or above the second from last peak. So that low coming in at 146.65, and that last peak there coming in at 145.61. So that trough coming in above that previous, that second from last peak. So the price action there is what we would call strong. So all we need to do is break that last medium-term peak. That last medium-term peak was at 159.29, so we place a non-stop order 2 pips above that at 159.31 with a limit to $160.90. Our protective stop, $2 signs there, coming in at 146.61, and I'm just going to check that last because our little red line there seems to have moved. So the low there, 146.65. I suspect that 145.65 is the right number. So let's go through and just double check. Just wanting to make sure that that calculation is right. So the low there, 146.65, 146.65 times. We need to be at least 0.5% below that, 0.995. Means 145.91. So we're 0.5% below that particular level there. And we also need to be outside of our 2 ATRs. So our 2 ATRs taken from our entry point. So let's go through and check that. Our entry point is 159.31, 159.31. And take away from that our 2 ATRs. Now, 2 ATRs, we have to go to our last candle, is $12.48. So subtract $12.48, and we get 146.83. So none of those numbers, 146.61 or 145.63, is currently at that level. Now, if we take our 2 ATRs from our entry level, our 146.83, we are going to be above that last medium-term trough. So just bringing that up again, our last medium-term trough is at 146.65. Our 2 ATRs would be coming in at 146.83. So our 2 ATRs is actually above that last medium-term trough. So we need to defer to the lower the medium-term trough, which was 146.65, 146.65, and we need to deduct 0.5% multiplied by 0.995, and we have our protective stop at 145.91. So let's change that. 145.91. And we'll go back to our stop sign there, our stop line, 145.91. There we go. Took a while, but we finally got there. I'll just remove that value line. And just to recap, on stop at 159.31 with a limit to 160.90. Protective stop coming in at 145.91. That's Cracker Barrel Old Country Store. Next one on the list, FB, Facebook. I wonder how many of you are on Facebook. I'm certainly not. I prefer to pick up the phone and actually talk to my friends. On this one, we've just got to break that last medium-term peak. And as such, our on-stop order is at 99.26 with a limit 1% above that level to $100.25. A protective stop, at least 0.5% below that last medium-term trough and outside of 2 ATRs, has our protective stop at $91.20. That would have been nice to see a little bit stronger candle on that previous period. Let's just zoom out and see where we are in the scheme of things. And certainly we are at all-time highs. I'm just zooming back in there. Just to recap, Facebook, $99.26 on stop, that is, with a limit to $100.25, $100.25, protective stop at $91.20. Next one on the list, Google. Very strong week a few weeks ago. Since then, it's had a little bit of a pause. We've just put in a short-term uptrend last week, so therefore confirming the formation of a new medium-term trough. Where are we in the scheme of things? Well, let's just zoom out and see. Again, we're at all-time highs. So certainly Google must be doing the right thing, and the market obviously liking this particular stock. Again, a stock that is in the NASDAQ 100 as well, so adding to its performance over recent times. As such, we need to break that last medium-term trough, that last medium-term peak. The last medium-term trough well clear of our second from last medium-term peak, so the price action on this one very, very strong. On stop at $713.35 with a limit to $720.48. A protective stop coming in at $648.29. So what is that in percentage terms? So let's go through and just have a look at that. So we've got 713.35, and let's take away our protective stop at 648.29 equals 65. Now divided by the stock's price, 713.35, and we have a protective stop. We need to multiply this by 100, so moving decimal point 2 places, that's a protective stop of around about 9.1% away. So certainly fitting in with our general sort of rule of somewhere around about 10 to 12% is our general sort of average protective stop. Interactive Brokers, this is one that's already in the portfolio. It has set up again. You'll see the initial entry level back down here at 35. Interestingly, a price volume volatility signal went off a couple of weeks ago. So just to reiterate, at your discretion, choosing to exit part of your holding when a price volume volatility signal goes off makes sense, because quite often when that signal goes off, we get a retracement. Now, we've had a retracement for a couple of weeks now. That move from the initial entry point, now this is not exact, this profit and loss line. The profit and loss line, you'll see there, if I draw that a little bit more accurately, what it does is it actually goes from the close as opposed to the entry level. So you've just got to bear that in mind along the way. So that's a return of around about 27% in a little over 2 months. So if that's something that you think is worthy taking half off the table, then certainly you can do that as part of your portfolio management. Should the price come back and the price closes below our trailing 3 ATR, that means that we're out of the trade. So if that was to occur, you'd end up with a net result of somewhere between 27.5% and an entry level somewhere below your 3 ATR. Where would that be? Well, we're never too sure, but let's just assume that it was somewhere down around the 38.50 level. Then the return on that second half of the trade is going to be somewhere around about 12%. So splitting the difference between 27 and 12, you're going to end up with a net result somewhere around about the 19-20%. So still not a bad outcome. Let's just remove that off there for the time being. With a bit of luck I can do that. There we go, it's disappeared. So now the latest setup in terms of this one is probably getting a little bit out there in terms of percentage, but if we break the $46 level there, and the reason I haven't put the annotation on here is that it's starting to be a little bit broad in terms of the actual percentage move. In terms of price action, certainly ticks the bill. It's just, as I mentioned, a little bit wide in terms of our percentage. 7 on 46, so if we go through and have a look at that, just as a rough calculation, we're getting up around 15%. So I haven't put that one into the watch list this week, but certainly one that did meet the price action requirements. The next one that absolutely did, MIDD, Middleby Corporation. You can see the price action here, that last trough coming in well clear of the second from last peak. Let's just zoom out and see where we are in the scheme of things. All-time highs, so performing very, very nicely. A little retracement last week. Would have been nicer to see perhaps a stronger candle last week. If we had had a stronger candle, we may have found that we've already passed that that last medium-term peak. So we'll have to weigh that up as well. So the on-stop order for this, we've just got to pass that last medium-term peak. We have an on-stop order at $125.33 with a limit to $126.58. A protective stop below that last medium-term trough outside of 2 ATRs, and that comes in at $115.91. That's MIDD. Next cab off the rank, Penn Gaming. Again, last week's candle, a higher high, higher low, confirming short-term uptrend, therefore confirming the formation of a new medium-term trough. That trough that's formed, is it at or above the second from last peak? Clearly it is, so meeting all the price action filter requirements. We've just got to get past that last medium-term peak. So to do that, we need to get up to $20.25. That's the on-stop order with a limit to $20.45. Our protective stop coming in at $18.23. That's outside of 2 ATRs and at least 0.5% below that last medium-term trough. Just zoom out to see where it's been, and again, we're at blue sky. So thinking about where the index is, where the stock is, great relative strength of recent times in particular. So all good things pointing in the right direction, all the important things. That's Penn. Next one, Progressive Corporation. Some very strong candles of late. Really high relative strength. A period of sort of sideways movement. Sideways movement when the index is going up tends to be reflected through inferior relative strength during those periods of times when the stock is resting or just going through a period of stagnation. As soon as the price action starts to improve and starts to move in the right direction, we're getting motive phase happening here. We start to get the increase in relative strength. We're just waiting for our price action filter to tick the final boxes. And it did last week because we put in a higher high and a higher low. So on this particular stock, now confirming that we are in short-term uptrend, medium-term uptrend and long-term uptrend. We just need to break our most recent medium-term peak. So the order becomes on stop at $31.44 with a limit to $31.75. Protective stop coming in at $29.76. That's PGR. Right, next one in the ASX. Charles Schwab Corporation. This is a company that is also not dissimilar to Interactive Brokers. Charles Schwab owns Options Express as one of its brokerage platforms as well, and exhibiting not dissimilar price action to Interactive Brokers. Certainly last week, putting in a new trough the trough at or above the second from last peak, which it is. We clearly just need to break our last medium-term peak. That last candle, if we have a close look, already appears to have done that. So we just want to make sure that the high of that last candle is 35.72. So we need to enter 2 pips above that. We just want to make sure that that entry level is not greater than 1% above the previous medium-term peak. 1% added to that previous medium-term peak is 35.90. Clearly, the high of that last candle, 35.72, is lower than 35.90, so it hasn't moved that 1%, because obviously we need to know how far does a stock move before we forget the setup and move on to another one. So we've put in a basic rule: as long as it's within 1%, that's fair and reasonable, then that's acceptable, and that certainly meets the bill in this particular case. So hopefully that makes sense. If it doesn't, you know what to do. Give one of your ETC coaches a call or request a coaching call, and either David Seal, myself, or Jeff Cornwall will be in touch and chat to you over the phone. TSO, another setup here. Last trough coming in at or above second from last peak. A lot of white candles in here, so it's looking very, very nice. Really good, strong price action for a long period of time. Let's just zoom out and see where we are. All-time highs. We'll just zoom back in a little bit. Certainly moving out of this, a little bit of sideways movement here. Bursting out, coming back, retesting these previous levels. We've just now got to break our last medium-term peak. So price action on this one, meeting all our criteria. On stop order on TSO at $104.46, with a limit to $105.50. A protective stop coming in at $93.49. So we're up to T's. We must getting close to the end. Tyler Technologies, again, similar price action, confirming short-term uptrend, therefore medium-term trough also being confirmed. Last medium-term trough well clear of that second from last medium-term peak. All right, so on stop on Tyler at $145.76, with a limit to $147.21. A protective stop coming in at $131.74. That's Tyler Corporation. Again, let's just zoom out and make sure that we're doing all the right things. And again, all-time highs. So again, very strong performing stock given what the rest of the benchmark is doing, and also exhibited through a very long established relative strength as well. That's Tyler Technologies. WR Berkeley Corporation. Seeing a nice retracement here. These previous points of supply coinciding with a new point of demand. The price action very good on this one. We've had the short-term downtrend. Last week we're putting in a higher high and a higher low after that pin bar candle. We've just got to burst through the most recent medium-term peak. As such, we have an on-stop order at $56.75 with a limit to $57.31. A protective stop coming in at $53.25. That's WRB. Let's just zoom out again, see where we are. And again, we're at all-time highs. So stock performing very, very well. This was the last one, and I happened to come across this one as I was doing part of the portfolio review and just checking on trail stops, etc., on those open positions in the watch list. And I happened to notice this one here, that the last candle is higher than the second from last, and the low of the last candle is higher than the second last candle as well. So we're in short-term uptrend. So as such, because we've got a short-term uptrend, we've just had a new medium-term trough formed. That medium-term trough is clearly well above the second from last medium-term peak. As such, it ticks the boxes on our price action. Where are we in terms of resistance levels above our head? we're at all-time highs. So hopefully some of you have been on this stock and are still in it. It's setting up for those of you who aren't in it yet, or those of you who perhaps wanting to add to a position. Certainly exhibiting very good relative strength. We just need to break that last medium-term peak, and to do so the on-stop order comes in at $73.95 with a limit to $74.68. A protective stop coming in at $67.04. That's GIII. I think that's right. I feel like saying Aussie, Aussie, Aussie. GIII Apparel Group, and I think that's the last one in the US. I'll just go across to the Australian market and then over to you to see whether you found any others along the way. One that's already in the portfolio is IXJ, which is a ETF, a global healthcare ETF, which is also in the portfolio. It's also setting up again. So certainly you'll see in previous occasions where we've had very good price action, meeting our price action filter, entry opportunities as an example through the around that 125 level. And the stock performing very well. Look at the relative strength, great history of relative strength performance. Some sideways movement certainly along the way, but our trailing 3 ATR keeping us in this whilst it recuperates, recovers, re-energizes for the next move up, which it's had. It's had a nice retracement. Last week's candle could have been better. It's a black candle, so it closed lower than when it opened, but it still put in a higher high and a higher low, so it ticks all the boxes on our price action. In terms of where are we, blue sky, certainly a very nicely performing ETF. We just need to place an on-stop order at $156.25 with a limit to $157.72 and a protective stop at $147.67. That's IXJ. I think that was the only one that I came up with on the Aussie market. So what I will do at the moment, I'll hand it over to you, the audience, to see if you've got any that you managed to find either in Australia or in the US. And then we'll go through and have a quick look at the broader portfolio as well. Okay. All right, it appears as though we haven't got any at the moment. That's okay. If you're busy typing away, I'll keep an eye out to see whether you've got any suggestions coming up. What I might do at this point in time is just have a look at a couple of stocks that did stop out over the last week. So I'll just go into the US market. A couple that did stop out last week were SKY, Skyworks Solution. Last week you would see our 3 ATR line coming up and at the same level as our initial protective stop. So what that means is that our 3 ATR line now takes over, and last week price closed below its 3 ATR on the trailing stop, so Skyworks is an exit at market tonight. That's SKY. The other one was MCK. So we'll go and have a look at that one. This one's been in the portfolio for an extended period of time. Just last week closing below its trailing 3 ATR. Not by a lot, but again, the rule is if it closes below its trailing 3 ATR, then we exit at market on the following open. That was MCK. SLM. Again, a stock that really has gone sideways for a long period of time. It's moved up. It's moved 3 ATRs in completely the wrong direction. It looked like it did try to hold up through this particular level here with the pin bars, the lower wicks on these candles, etc. But certainly of late, several lower closes, closing below its trailing 3 ATR. All right, Mark says the macroeconomic review, it looks like it may not have been posted, so I'll have to have a look at that. on Friday. If it hasn't been posted, it won't take long. It'll be up there as soon as we finish this particular session. So thank you for the reminder on that. So that was the US, a couple of stocks that did stop out last week. There was one cancelled order from last week as well, which was AVG. So I might just bring that up and just have a look at and explain why. AVG. There it is here. And let's just zoom in a little bit on this one. So last week, all we were waiting for was 2 pips above. If we go through here and have a bit of a look, I'll move that annotation out of the way there. So the high there was 29.09. The high on this previous candle was 29.15. So this was one of those examples where we said, okay, is that within 1% of the previous medium-term peak? And the answer was yes, so that was fine. We could use this last candle to enter on, so we needed to enter 2 pips above the high of that candle. So 2 pips above the high of 29.15 is 29.17. The following week, did we get up to 29.17? No, we didn't. We only got up to 29.05. So we didn't have a higher high and we didn't have a higher low. We had an inside bar. Last week we had a lower high. Let's check the high of that one. The high there is $29. Did we get to 29.17? No, we didn't. We've put in a lower high and certainly a lower low. Therefore, we now have short-term downtrend, and this wherever this trough is going to form, whether it's at this point or further and further down, it now means that we have falling troughs as opposed to rising troughs. So it doesn't meet the price action filter, and therefore that order has been cancelled. Right, let's go through just very quickly, have a look at some of the Australian stocks for the time being that are in the portfolio. I think it's important to keep your eye on these sorts of things, whether you're in these stocks or not. I think it certainly does reinforce the importance of proper trade management. You're never going to get stocks that give this sort of profit to your portfolios if you aren't patient and diligent in just following a very simple trailing stop methodology. And that's one that we're all using, and that is that little green line, that trailing 3 ATR, has meant that when we got into CZZ on the 4th of May, a long time ago, above these levels of $12.07, the stock is closed on Friday at $16.92. You can see that the initial protective stop was a little over $1.09. $1.09, and on that particular trade you are now up $4, getting close to $5. So you're getting very close to 5 to 1 in terms of risk to reward. Interesting, along the way, whilst we did have a price volume volatility signal a number of weeks ago, not that long after getting into the trade, that was one where certainly the price volume volatility signal went off at the end of the week. It went off at about the same level at which we entered the trade. Are you going to take half of your position off? Well, that's entirely up to you. If it was me, absolutely not. There's no point in doing that whatsoever. At this point in time, really strong price action, continuing to drag that trailing 3 ATR. Now, the way that 3 ATR stop works, it's a volatility-based stop. That is, it's using a measure of average true range and keeping a safe distance below. Now, it's 3 ATRs, and it works on the close of the candle. Okay, so if we have a higher close, then what it will do is it will calculate 3 ATRs back from that new higher close. If we don't get a higher close, then what's going to happen is your ATR line is going to go flat. So until we get a higher close, it will not drag that 3 ATR line upwards. So that's CZZ, Capilano Honey. I know some of you are on that. Is anybody got that in their portfolio? I know a few people that I've talked to over the phone have Capilano Honey. Let me know if you are on that. IHK, this is the Hong Kong ETF. Of recent, price action hasn't been real flash on this one. It did, a few weeks ago, penetrate or breach its initial 2 ATR soft stop. So as such, we had to put in a hard stop, which we have, 0.5% below the low of that particular candle. Since then, it's moved back in an upwards direction. Still, it'd be nice to see this get back above our entry point. Some of the other ones along the way, just in terms of how they're holding up. When you're ready to be on charts, anytime soon would be good. Auckland International Airport. Last week, we haven't trailed the stop on this one because we didn't get a higher close. If we had got a higher close, then as a result, that ATR line would have been dragged upwards. Moving very nicely. Fantastic. A couple of people who have CZZ. Terrific. 3 people. Awesome. ARB, that was one you'll see there pretty clearly. We didn't have a higher close, and as a result, now the reference point for this particular one, the highest close out of all these candles here is this little white one way back here. We haven't had a higher close since then. Even last week we didn't have a higher close, and as a result our 3 ATR line, our trailing stop, has just gone flat. So again, it's just important to understand how the trailing stop methodology works. Boral, this was one where people got in early through this particular level. Since then, price moved up, and then a period of downward movements. In actual fact, medium-term downtrend as a result. So medium-term downtrend, if we've got medium-term uptrend along the way, that makes that a long-term peak. And our long-term peak we've just broken through, so that's not a bad sign. We survived the retracement with our 3 ATR trailing stop, so that was pretty handy. Just recently, a higher close was had on this particular candle here, and as a result it's dragged up our, sorry, not that one there, that previous one there, that candle there, the highest close, higher than the one way back here, which is where our ATR line went flat. So it was the candle, not last week, but the week before, giving us a higher close, and as a result dragging up that 3 ATR. That's Boral. I know some of you have got that and have survived that pullback, so that's terrific. BWP, not particularly a good candle last week, and as a result, just a flat ATR. As a result, Generation Healthcare, we've been in this one for a little while, a period of stagnation through here. Nice candles 2 weeks ago, we just need a higher close, and if we get a higher close this week, then that's going to drag that trailing 3 ATR line up. Again, it's above our initial 2 ATR stop, so we're removing, or the amount of risk that we had on that trade to start with has been reduced. GOZ, again, last few weeks we're not getting those higher closes, and as a result our trailing 3 ATR line has just gone sideways. So we just need to see a little bit more strength come back into that. Again, keep in mind what's happened with the broader market. This is the ETF based in, an ETF representative of Europe, I think parts of Northern Africa, parts of Asia as well. Again, ATR line sitting flat for the time being. Looks like it wants to go higher. Price action on this one not quite as good as the other ETF that we were looking at, and so it doesn't tick the box on the price action filter. James Hardie again continues to move upwards really nicely. Last week, a bit of a black candle there. Not surprising given what the rest of the market has done as well. Price volume volatility signal on Select Harvest. This has been a stock that entering in at $8 and going up to $13.65. Has anybody got Select Harvest in their portfolios? Has anybody had Select Harvest in their portfolios and decided to get out? A more important question. We know what the rule is, to stay in until price closes below its trailing 3 ATR. Okay, we've got a price volume volatility signal on this one at the moment. So let's just do a very quick, rough, back of the hand calculation. You've been in this stock for potentially around about 112 days. Let's call it, what's that, nearly 4 months. The price has gone from $8.26 to $11.40. That's a 38% return over that period of time. If it keeps continuing at that rate, that will be over 180% per year. I'm not suggesting it's going to do that, but that's a pretty nice return in what is a relatively short space of time. certainly taking half off the table at this point in time, even if the price comes all the way back down to where you entered, which is highly unlikely. However, it is still a possibility in that our rule says we must get out once price closes below. If price closes this week all the way down at $8.06, it certainly will close below its 3 ATR, meaning that you would be getting out at around about the point at which you entered. So making 38% on half the trade and 0 on the other half still means you made 19%. Our market is up about 0.5% for the year. That's still outperformance. Okay, a few people still got it. Some people had it. Interesting. Let's keep going. We're pretty close to the end of the Aussie portfolio, and then we'll wrap up with just a couple of observations. All in good time beyond charts. Oh, there we go. Aurizon Holdings, one just recently. I'll put on the trailing 3 ATR so you can see that. At this particular point in time, really just a little bit weak of recent times. We need to see this start moving around and going towards the upward direction there on AZJ. And beyond charts, I think it's run out of energy. Come on. My computer is pretty slow because I have a number of things that are running, and beyond charts doesn't perform that well when it's overloaded. There we go. AHD. This is one that's been in the portfolio for a period of time. Really a bit lackluster of late, whilst it's still doing better than the market. It would be nice to see it start to become a little bit more motive in the upward direction, but you know, again, it's still well clear of its trailing ATR. This is the initial protective stop, or the second entry for this particular stock a while ago. Really hasn't done much of late, and hence that trailing 3 ATR is not coming up as well. I think there's only a couple more in here. APE Eagers, again, this has been one that's been in the portfolio for a considerable amount of time, and you'll see that last week that higher close as a result dragging that 3 ATR line up as well. So keep in mind that we are medium term in our outlook, so we're looking for those trades to continue onwards and upwards. This is a recent addition to the portfolio. Moved up, it's come back down. Interesting that that higher close also dragged its trailing 3 ATR up as well. For the time being, it's still below its initial 2 ATR, so the 2 ATR is the one that we follow until that trailing 3 ATR surpasses. Yeah, good question there, Richard. He says, why does the 3 ATR go down occasionally? Well, what I've got here, and you can add this to your own if you like, there's two trailing stops that you can use on Beyond Charts, and I'll just show you these in the indicators if Beyond Charts is going to allow me. One of them is this ATR trailing stop here, which we typically use with a 3 up multiplier and a 0 down multiplier. So it doesn't look at any downward price action movement in calculation of that. So if I go and apply that now as a simple 21 period ATR using a 3 multiplier, so a 3 ATR, and apply that to the chart. Now what it does is the 3 ATR over periods of time, it does do this sort of thing where it goes down. Okay, so that's the sort of thing that you're referring to there, Richard. Now what I can do, I'll just take that one off. Actually, no, I'll leave that one just to illustrate the point, but what I might do is I might just change the color of that. I'll just make it red to show the bare bones vanilla, if you like, trailing a 3 ATR, which is part of Beyond Charts. The other one that I've got up here is a slightly different one. Now you've also got it as well, and it's this one here, the JB Volatility Trailing Stop. Now it does exactly the same thing, uses a 3 ATR period, But what it does is it gives you a hold period that you can actually you can move that out to 60 periods or 80 periods as an example, and apply that to the chart. And then what it does is it holds a straighter line. So that's the one that I used for the purposes of maintaining trailing stops. But that's a really good question there, Richard. So those of you who want to use the 3 ATR, you can use the JB. That's the Jimberg volatility stop. And all that does is it just means that it keeps a straight line for a lot longer than the bare bones vanilla one. Good question though. Okay, I'm going to wrap up very shortly. I'll just go back to our PowerPoint slide. Again, this is a part of my portfolio. I have funds that I trade in the US. I have funds that I trade locally. I have funds that I trade through ETFs as well. So without giving away too much, I just wanted to show you the performance recently. This is my portfolio from the beginning of the year. I have a number of stocks that I've held for a while. I certainly got belted last week. My portfolio was actually down around about 2% for the week. It was actually, I think it was probably down a little bit more than, probably around in sync with what the market was. But all I wanted to highlight in this was that I do have a number of stocks that are up, a fair way considering what the rest of the ASX market is doing. So the only reason that they've got to this point, have I been lucky along the way? No, I've just stuck with picking the stocks that have got the appropriate relative strength, that are showing the right sort of price action, and I've just been patient. Some of these stocks have been up a lot more than that. Some of these stocks I've added into. So as an example, this one here that you'll see that I'm up 27% on, I added into that recently. It was going very, very well. It did have a price volume volatility signal a few months ago, so I sold half. I've just been waiting recently for that to move back up to a recent level past that old price volume volatility level. I added into it again. So adding more into that particular stock, it's going in the right direction. That particular stock is a stock called AMA, and it's been performing very, very strongly. So that's a stock that at one stage was up over 50%. As I said, selling down part of that and re-adding into it just recently. And as a result, my net return on that is at 27%. So that those of you who've got your own portfolios, etc., will understand what that means and how that works. I've certainly got a few stocks in here recently that I'm underwater on a little bit. Some of the stocks, over the course of this last week, coming back as a result of that. But the thing that makes the difference to my portfolio over all of this is just being patient and managing those trades, so that with the right capital management in place, that those stocks that are performing nicely and strongly are holding up the rest of the portfolio. And when the market turns around and moves up, these stocks that are outperforming along the way are going to rebound very, very quickly. So I guess it's just a message from me as an individual investor, a trader, as your ETC coach, just to focus on doing the right thing. Okay, I don't know what's going to happen in the markets tomorrow. All I've got is my ability to manage my trades well. So I just encourage you to do the same thing, and don't become too obsessed about what you hear in the news and all those sorts of things that are going to challenge you to hold on to your positions, and your mind is going to tell you to get out of trades when there's no reason, there's no trading plan reason for you to get out of those trades. All right, just a quick cap. Those of you who haven't seen the macroeconomic session from last Friday, I will check that it has been posted properly. If it hasn't, certainly it'll be up there very, very soon. It's the first thing I'll do once I jump off the mic now. I did run an education session last week, just really about tying everything together, just getting people to think about their journey, what they've learnt up to this point in time. How has the way that you think about the market, your portfolio management, your trade management changed over the last 2, 3, 4 years along the way? And if you've noticed, if you've had an opportunity to just sit back and pause and think about that, I think you'll find that you've actually learnt quite a lot If you've still got things to learn, then please request a coaching call. That's why we are here. I think it's very important that you continue to tap in. You've got your coaches there. We're at your beck and call, so please touch base. And I know that certainly the other two guys make a lot of outward bound calls, touching base and keeping members in the loop. The EFM, those of you who haven't caught up with that particular strategy, again, it's on. There's a new portal on the website, the EFM, the Elite Funds Maximiser portal. I encourage you to go through and watch the videos. If you've got any questions, again, get in touch with us and happy to explain any of that with you as well. All right, that's it for this week. If you need to speak with any of us, please, on the following emails that we send out, just click on the link, request a coaching call, and we will be in touch. That's it for this week. We will catch up with you, if not on the education session this week, then certainly live next Monday at 9 a.m. Before I do go, I do have one question. If you're all still there, if I was to do a Sunday evening webinar rather than a Monday morning webinar, would you be in favour of that? Now, I know some of you have left the building, like Elvis, but those of you who are still listening, if I was to do a Sunday evening webinar, would you prefer that? Some are saying yes, some are saying yes, would like a Sunday, that would be okay. Some are saying no, Sundays are holidays, would suit better at 8 p.m. Yes, like Sundays, prefer Monday. No, Sunday or Monday, both okay. Depends on time. Probably I would look at doing it at probably around about 7:30 or 8 o'clock. Again, there's a fair bit on telly on Sunday nights. There's 60 Minutes and those sorts of things. Just trying to get a little bit of a feel for if I was to do it at 7:30 or 8 o'clock for an hour rather than Monday mornings. Some people don't like 60 Minutes. Okay, well, look, I'll take that feedback on board. All your comments are coming through, so I'll assess that and see if I can get some sort of opinion on that. Certainly, again, the session would be recorded, so you could absolutely watch it first thing Monday morning if you wanted to. I guess it's really just about getting audience interaction, and I really do like having live members there and getting people to ask questions and that sort of thing. So if the view is that perhaps Monday morning we're still going to get better interaction, then I'll keep it on Monday morning. But if it appears as though we'll get good interaction of a Sunday evening, then I'd absolutely jump to a Sunday evening. So just wanted to throw that out there for you. Thanks for your feedback on that. I see that there's lots and lots of people that have typed in, so I'll go through all of those answers in due course, and perhaps over the course of the next month, make a case for either changing it or keeping it as it is. All right, folks, thanks for watching. We'll catch up with you later on in the week. Bye for now.